Australia's housing rental system is a mess. It's not working for tenants or landlords. For tenants, rents took a sharp turn upwards after the pandemic, from an annual growth rate of less than 1.5% a year to more than 9%, and that hasn't slowed down yet. So the proportion of income needed to pay rent is now the highest it has ever been. Researchers have concluded that it was the result of a perfect storm of smaller households and the surge in migration after the pandemic, combined with only a short-lived rise in house approvals and no increase in units at all. In fact, as you can see from the chart, approvals have barely changed in 30 years, while Australia's population has increased by 10 million people. But the system is not really working for landlords either. The gross rental yield is a bit less than 3.6% on average, having drifted downwards since the pandemic. Now that's a full percent below the interest on a bank account, which doesn't need the gutters repaired or the garden weeded. Now it's true that you can negatively gear, but only if you're making a loss, which is not ideal. Otherwise, income tax has to come off that yield with no dividend franking. And then there's land tax. For a $2 million property, the national average of that is $18,811. Now, the only reason to accept a lower yield than bank interest and pay that land tax is that you expect to make a capital gain, of which only half is taxed, which has been a good plan up to now, including last year. But all governments, state and federal, are working hard to flood the market with apartments and make housing more affordable. That is, to make it a bad investment. Now, it's unclear yet whether governments will succeed in that, but whatever happens, they'll have a problem. If affordability does improve because there are no more capital gains, landlords will want out. If it doesn't, there will be a lot more lifelong tenants needing a lot more places to rent.